you could lose tens of thousands of dirhams in Dubai real estate, not because the market is crashing, but because you've made one of these 7 common mistakes. Especially if you're an overseas buyer, chances are you're making at least one of them. So let's break it down and I'll show you how to avoid each one. Starting with buying without fundamentals. This is such a common mistake, and we see it all the time because understanding area fundamentals is overlooked by some of the most seasoned investors that we've worked with. A lot of them get caught up in glossy renders and brochures. They buy into the hype, not data. And if you're not clear on population density, connectivity, infrastructure, and the real rental market around your project, you are gambling. What is the solution? It's to focus on communities with real organic demand, not speculative launches, far from livable zones, and use tools which will show you real-time data. Use rental heat maps and understand the urban development plan for that area. Second one, misreading payment plans. This is again very common. We've seen it happening over and over again. A lot of times people say we will do this, but it doesn't really show on paper. Many buyers from India, from UK, Pakistan, Nigeria underestimate how volatile the exchange rate will be. Bank charges, offshore transfer laws can be different. So understanding the payment plan in depth is very, very important. Budget not just for the payment plan, but for the delays, currency loss, approval times. Ask your broker for a full payment plan calendar with due dates. Number 3, improper title registration. Not getting the Ukud registration done on time. Overseas buyers often delay title registration or use wrong legal entity. If it's not registered correctly, you could run into tax inheritance issues, compliance issues, even delivery issues. What is the solution? If you're buying personally, register under your name. Please make sure your ukuds have gone through. Make sure that you understand the inheritance laws. If you're buying as an investor, consider proper offshore structures with legal guidance. Speak to your tax consultants. Make sure you've done proper due diligence. Fourth, most important, overtrusting the developer. Not all developers are equal. Some are fantastic at delivering, others are great at marketing. Late deliveries, subpar handover quality, inflated service charges. This is all part of the market that we are in. What is the solution? Again, check their history. Make sure you read their reviews. Previous buyers, confirm with RERA registration, escrow account. All of these are multiple different checks that you should be looking at. Now, this is my favorite one, skipping exit strategy. Before getting into an investment, even if you think about buying it for yourself, you should always have an exit strategy. What are you going to do if the market corrects? Do you have the funds to see it all the way through? A lot of buyers buy it thinking or being committed that we will sell it for you after a certain period of time. It doesn't work like that. You need to look into your finances. You need to be very sure about how much the rental yields are going to be. It's a mix of so many different things that you need to be sure of before saying yes to the property. Number 6, speaking to unqualified brokers. Again, we see it more often than not. A lot of overseas investors are stuck with their properties because the brokers committed that we will get this done for you, and after that the brokers block them, they disappear because even the brokers know that what they have committed is not possible, not in this market, any market in the world. So you need to be sure of the numbers. You need to again plan your cash flows accordingly, that if the sale doesn't happen at the time the broker said it was going to happen, what do you do next? But I don't want to say do not trust the broker. Obviously we are in this market as well. You just need to know what brokers to trust and what are they offering. Is it too good to be true? If yes, Maybe it is. I'm not saying all brokers are wrong, but a good broker will tell you when it is not the right project for you. Number 7, failing to verify project registration. Some overseas investors unknowingly buy into projects that are not yet approved by the Byland department. They might take a certain time, maybe 3 months, 6 months. This exposes you to a massive risk, especially with pre-launch. You need to be very, very careful. Again, developer reputation needs to be very solid. Solution, always check for rarer permits. DLD can show you escrow account, and now with the new regulation, even the QR code could be linked to the official DLD system. Let's do a quick recap. To avoid losing money or falling into regret, make sure you understand the community, the area, and most importantly, the fundamentals. Study the payment plan in detail. Make sure your title deed is legally registered. Vet the developer's history. And most importantly, plan your exit before you buy. Obviously, speak to a broker that has credibility. You can see the numbers. Make sure they know what they're talking about and they're not overcommitting. Verify the project's legal status. In case if you need any more help, please feel free to reach out.